In today's video, I'm going to teach you how to run profit margin report in QuickBooks. We're going to use the profit and loss report and turn on a simple setting that shows each line as a percentage of your total income. That percentage view is what reveals your profit margin, so you can quickly see how much you're keeping after costs and expenses. Start by opening QuickBooks and signing into your company so you're on the main dashboard. From here, head to the Reports area. This is your hub for all financial reports. If you have many reports, you can also use the search bar at the top of the reports page to find what you need faster. Next, open the profit and loss report. This report summarizes your revenue, cost of goods sold, expenses, and bottom line net income for a given period. It's the best place to measure profitability because it shows both the totals and, with one setting, the percentages that tell the story behind your margins. Before we look at the percentages, set the correct date range. Use the Select Period drop-down at the top of the report to choose the time frame you want to analyze, such as this month, this quarter, last quarter, year to date, or a custom range. Pick the period that aligns with the question you're answering. For example, choose a single month to evaluate a recent campaign, or a quarter to compare performance trends. Accurate dates matter here because profit margins can swing based on seasonality or timing of expenses. Now, turn on the percentage view. Look for the option labeled Percent of Income and select it. This adds a new column showing every line on the report as a percentage of total income for that period. Then click Run Report to refresh. Here's how to read it. The cost of goods sold percentage tells you how much of every sales dollar is consumed by direct costs. Subtracting that from 100% gives you your gross margin. The expense percentages show what portion of revenue goes to operating costs like payroll, rent, or marketing. The net income line at the bottom displays the percentage that truly matters for profitability, your net profit margin. For instance, if net income shows 18%, it means you're keeping 18 cents of profit for every dollar earned in that period. If something looks off, first confirm the date range is correct and ensure significant transactions are categorized properly so they land in the right buckets. That's all there is to it. Using profit and loss with percent of income gives you a clear, consistent view of your margins in seconds.